All right, you can't see it in the national economics reports, but a handful of companies during their earnings season have reported that wage pressures are starting to eat into their bottom lines. Theo Francis joins us with this story. Theo, this is something I've literally, on the blog, I've been banging the drum about wages for a very long time, saying that we need to see this as a real sign that the economy is improving. Still, in your story, you point out in the national stats, it doesn't really show up. But tell us about the companies that are talking about this.
Well, a number of companies, and what's interesting is the broad range of companies that are talking about wage pressure or wage inflation to some degree. You have a bank, State Street Bank, you have restaurant companies, you have Dr. Pepper Snapple, you have PPG Coatings, which is an industrial company, Avery Dennison, which makes labels and other pressure-sensitive materials. And what the commonality here is that a lot of these companies are saying, hey, this is just business as usual. Some of the companies talk about wage inflation regularly, but what you're seeing at many of these companies increases that are above what you're seeing in the national figures, and you're seeing them talk about specific wage pressures. One company that does trucking, for example, talks about the difficulty of finding drivers. That's been in the air for a little while. But LyondellBasell, which a chemical company, is increasing its ethylene capacity in Texas, and it's running into a lot of construction issues there where it's having trouble finding the experienced labor. It's having to pay a little more or get a little less experienced labor in its construction projects. You have a number of companies that are simply pointing to higher than expected or higher than previous wage increases.
Right.
And it's only a matter of time before that either gains traction, and which will be good for the economy, or if it doesn't, this could turn out to be a flash in the pan.
Right, and what kinds of numbers are we talking about here? Because obviously, you look at, and we can pull up a chart here, you look at wages since the recession, we're still at an overall level. I mean, we're still below what we were seeing during the recession, before the recession. What kinds of numbers are we looking at here?
Well, so overall, the Labor Department said on Friday that in April, wages were about 1.9%. They were growing at about 1.9% rate over the prior year. But some of these companies are talking about 3% or even more in a couple of cases. I mean, State Street said they gave, on average, a 3% base salary increase, which kicked in April. So that's pretty significant. That's well ahead of the national numbers, national averages. Again, it varies, and a lot of companies don't talk about numbers. So it's hard to go beyond the anecdotal here, especially when it's not showing up in the national figures yet.
Right. Are they talking about any pressure this is putting? It has to be putting some pressure on their margins, on their profits.
Well, so of course, anytime you increase an expense, and wages are a significant expense at almost every company, you're talking about a significant increase. And a number of companies are talking about pressure on margins. Yeah, in a few cases, they managed to eke out productivity gains that just barely compensated for the wage inflation and a few other factors, or didn't quite compensate, and so they saw their expenses go up a little bit and their margin go down a little bit as a result.
Right. All right, Theo, excellent. Thank you very much.
Thank you.